Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Kickstart video where I take a look at the three of the major currency pairs. So let's get started. Looking at the euro versus US dollar on the hourly chart, the CPI data in the US came in a smidge higher than expectations, with the headline number coming in at 0.1% versus 0.0%. The core measure came in as expected at 0.3%. If you want to spin it a good way, the 6-month average of the core came down to 2.8% from, I think, 3.2%, and it is at 4.0% for the real number for the year. But it's still higher than what the Fed targets, and a bit of a disappointment. So what we saw in the price action was actually the dollar went lower initially, whether that's algos that pushed the price higher immediately after, I don't know, but looking at the euro versus US dollar from a technical perspective, the price did extend above both the 200-hour moving average, it's a green line of chart, and the higher green line, this step line right here, which is a 200-day moving average, but then quickly rotated back to the downside. And where do we go? We went right back down to the 100-hour moving average. That's at 1.0772, and we are finding some stall at that level, at least for now. If the price were to go below that level, then we look toward the 100-day moving average. That's at 1.0757, and if we break below that level, it opens up the door for a rotation back down toward this level right here, which is the low from yesterday's trade, and also a swing low from Friday's trade at 1.07404, before we head down to the low price from last week at 1.07232. So that's a progress to the downside. If the 100-hour moving average can be broken, if it can't be broken, then we rotate back to the upside, and this is our resistance level on the top side now. That level comes in at 1.08038. So a little bit of something for everyone, but the dollar did move higher after the data. The euro versus US dollar lower, and but we are finding some stall near the 100-hour moving average. We'll see if that level can hold support and push ourselves back toward the 108 level. By the way, we have the FOMC rate decision tomorrow at 2 p.m., so that's going to come into play as well as we go forward. So let's take a look at the dollar versus yen in this currency pair, like the euro versus US dollar. So the dollar moved lower initially, down toward the 144.72-ish level, before rotating back to the upside, back toward the broken 38.2% retracement at 145.59. The current price trades at 145.45, getting back above the 38.2% retracement, and then this swing low going back to September 11th at 145.888 would be more positive for this pair. Note that in trading, a high from, I guess this is yesterday, the high price came up to this swing area here, which goes all the way back to this period over here. We had swing highs through here, and then swing lows, and then swing high before moving higher. We returned to that area in trading, not last week, but the week before, and also in last week we came down to that level before rotating to the downside. So this area did a good job of holding resistance ahead of the 50% of the move down as well. So that is going to be that was a key reason for the rotation back to the downside, at least from a technical perspective. The question now is, can we stay above the 38.2? We'll get and stay above the 38.2 at 145.55. Right now we are seeing the price rotate away from that level, trading below the 140, trading at 145.38. Finally, let's take a look at this sterling versus US dollar, and like the euro versus US dollar, we saw an initial spike to the upside here off of the data. Algos in play again, I don't know, but the high price did stall right near the this ceiling here, this short-term ceiling, I guess. Again, this is the hourly chart. This goes back to high prices seen from the last highs from last week's trading. We came right up to that level, near the 126.14 level, and found willing sellers against that level. We did break above the 200-hour moving average, but that was quickly reversed when we hit that ceiling and started to rotate to the downside. We are back below the 100-hour moving average, which is now resistance for traders at 125.65. Stay below that level is more bearish. Look toward the 38.2% retracement as the next key target. That's something to move up from the November 10th low to the high price that we saw at the end of November here. That level comes in at 125.24, and we move below that level, and we'll start to look toward the 200-day moving average. Last time the price traded below the 200-day moving average, well, maybe a little bit here, but we really found support against that level, moved to the upside. We also found support against the level here, but it was back here around the November 17th level. The price traded mostly below the 200-day moving average. So that's a long ways, and we're still a little bit of ways away from that level. But the history of finding support against the level here and here gives traders the idea that if we do go lower, break below 38.2, the 200-day moving average would probably be a tough nut to crack on the downside. Just guessing, but that's what I would expect. The 100-hour moving average now becomes resistance for traders, as mentioned earlier. That level again comes in at 125.65. If we move above that level, then we look toward this swing area and also look toward the 200-hour moving average once again. So there you have it. A look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.